Join us now to talk about what she's watching is technician Katie Stockton, founder and managing partner at Fairlead Strategies. Good morning. It's good to see you.
Good morning.
There's a number in what you told our people for the S&P that if that didn't hold by Friday, it would be significant. With that indication, and we don't know today if it's going to stay there, but that shows what it did on Friday. We should be showing the futures for what it says today on the S&P. So look at the futures. Is that below? Well, it doesn't have the total there. Or does that 61 points put us below the number? What was your number?
It does, yeah. And in fact, we actually closed below my number, which was 57.83 last Friday. The reason we care about this week's trading is that that would confirm the breakdown, assuming we stay down below that level this week. The short-term indicators are still primed for a rebound, so it's possible we avoid that confirmation. But I think the fact of the matter is that we have very weak momentum. It's evident behind the market. And if you take a step back and look at the major indices, they look a little bit like a double top formation, kind of the shape of an M on the chart. And that's not a good setup.
You said that the near term, there's counter-trend signals that could indicate a bounce that would be short-lived.
That's right. So several days, not several weeks. So our messaging has been to wait to get hedged or to reduce exposure. There's a lot of stocks that have broken support levels, as you can imagine, with this downdraft. And because these look like the double top formations, it probably will affect Q2 as well as what we've already seen. So
60-70% of the time in any given year, you have a 10% correction, I think, in the S&P.
Right, and we're not quite there yet.
Is this going to be it?
I think we'll probably see a little bit lower than that based on where secondary support is.
Worse than 10%.
Worse than 10%. We're already several percent off the highs, right? So the next support for me is around 53, 65 to 53.
50 what?
53. We have a 53 handle on that.
That's another...
and so it's about 6% below.
And it's another.
And it doesn't mean it's
8 or 9% from here, isn't it?
It's not a magnet necessarily. Support doesn't act that way, but it does frame potential downside risk. What we'd like to see is an oversold reading in our weekly gauges, and we don't have that yet. That could happen and get us a sort of a nice relief rally in between here and there, but it does frame downside risk.
Would you think that the NASDAQ would be in bear market territory if the S&P? I can't imagine it wouldn't be.
It could be. So you're saying the 20% plus downdraft. It's certainly possible. It's higher beta, and the technology sector has lost its leadership stronghold, and also the mega caps, and that's a big difference between this year and the last 2 years. We just don't have that mega cap leadership.
And you wrote this stuff before the clocks were turned. I mean, you're not just in a bad mood. Like, you're not just tired. And Andrew is exhausted.
Well, yeah, I am a little tired.
So this has nothing to do with Monday or daylight savings.
No, it's just not a bad mood. And listen, I mean, this is actually normal price action for the markets. We've just gotten so accustomed to a market that's barely interrupted on the downside for 2 years. So it feels really unsettling. There's plenty of reasons you could assign for the downdraft, but the fact of the matter, it's a very healthy longer-term development ultimately to get this kind of corrective action. The secular bull trend is very much intact, and we just think this is going to be more of a digestion year, more sideways than it is lower. Yeah, good way to put it. So we think that it will ultimately prove healthy.
Katie, I know you don't look at fundamentals for the most part. You're looking at these technical measures. But when you take what President Trump is now saying about the idea that you're going to live through some pain as we go through a transition, he thinks it's temporary. What do you see just in terms of if you could try and put that into what you see from the technical?
Well, right. It would actually be very much in following with what we're thinking, where we have this initial downdraft, and it feels very unsettling. It's what we already have, in fact, and now I think we're going to start to see the international equity markets participate on the downside to some degree. We've had such huge gains outside of the U.S., right? So it's been very U.S. specific.
You think oil is going to bounce?
I do, and that's a little bit of a contrarian.
Yeah, and that's been sort of a confirmation of a slowing economy, I think, so far. So does it bounce to 75 or to what?
I think into the low 70s per barrel for WTI is very viable based on our indicators. There we have a long-term neutral triangle formation. The triangles represent sort of a lessening in the volatility, but indeed it has been quite volatile short-term.
The confidence you have about charts, is it the same across all asset classes, or do you say to yourself, the charts seem to hold up better on equities, oil is more complicated, Bitcoin is something else, or are they all just the same?
Well, I would actually argue that anything that has like the deepest, most global liquidity will lend itself best to the charts, right? Or the indicators and the levels will be more refined, perhaps. But it is applicable across asset classes. The only place it really doesn't add value, perhaps, would be maybe a small cap biotech stock that has a binary situation. That's where, or where there's no liquidity. But for like, especially global FX and commodities,
and really on everything.
This is all very negative.
It is. You know what's
well, if we can look beyond,
this is a really
5:20 in the morning.
This is a really tough pill to swallow right now. I mean, I knew things were bad, but now it's going to be worse.
Try to think past this consolidation to the secular bull trend and realize that this is
when's that part coming?
Necessary. I think probably closer to Q4.
I'm not going to do a full boomer report, but once again, Jeopardy, 12th century mathematicity, Fibonacci.
So
we use Fibonacci.
These are key levels. I honestly wish.
12th, he was born in 11th, so that's.
I wish I knew why it mattered, but frankly, I do think these levels matter a whole lot because I've been watching them forever. So that range of support that I gave you is partly based on the Fibonacci retracement levels. It's a 38.2% retracement of the last bull cycle move.